So I like the idea about how you said that the setups give you the ability to place your stops and know when to place your stops, as well as you take profits as well. How important are stops and risk-adjusted trades in trading for you?
From a trading side, risk management is the most important part of it. So where a lot of people would look into a newer trade, would look into trade going, wow, if gold hits 2,000, this is how much money I'm going to make. I look at it in the reverse. I go, well, if it hits, if I put my stop over here, how much money can I lose? So it's the most important part of trading. And I don't care what system you use, you will not make money if your risk management is not on point.
It's securing your chips, right? Like in poker.
Yeah, if you don't have any control, you could have 90% of the chips in the game and just go all in and keep losing without thinking what you're doing or thinking what you're risking, you know. So it forms the whole thesis of my trading. You cannot trade without stop losses. If you want to be an investor, then no problem, you don't need stop losses. But then you're buying for the long term, you're probably not leveraged, but as a trader, you cannot trade without stop losses. And I bet you could go to a room filled with 100 new traders and ask them their worst experience in trading. I reckon 90% will be, well, I never had a stop, or I moved my stop because I didn't want to take the loss. Having a stop loss and taking losses is part of the game. It happens to all of us.
Yeah, we were talking about it on our weekly catch up on Discord, I think last week or maybe the week before. We were saying that feeling that you get when you're in a position that's going against you and you're kind of like, oh, I shouldn't be in this, but I'm going to hold on to it anyway. I hope that it comes back. And how people usually, when they get into a position like that, they're risking trying to get out at break even for like 1% of their account, but they could lose like 10, 15, 20%. And that's really what stop losses give you, is you don't get into that situation, because if your stop gets hit, okay, next trade.
Totally.
And it's a game of probability and having an edge.
But people take it personally. They think being stopped out's a bad thing. You know, being stopped out, when my stop gets hit, that's fine. I know my thesis was wrong. But then that also goes to the correct placement of stop losses. If you go, right, I'm going to buy over here because gold's going to 2,000, and I'm going to stick my stop loss 20 points lower, and then
get kicked out.
Right. So what happens is you're putting your stop loss in the wrong place. But more so, you just put a stop loss there. So when the market's down 15 points, you realize that's way more than I wanted to lose, because you didn't think about it. You think, well, I can't have my stop loss hit now because that's way too much. So gold will come back. It's going to come back. So I'm just going to move my stop loss. I'm going to move it 10 points lower. And then when it gets closer, even more in a hole. So you move it again. But then, worst case, it keeps going, and eventually you can't take any more pain and you stop out, usually at the bottom, and the market reverses. Or you get what's known as trader fatigue, that the market then starts to push up a little bit and you go, okay, that loss, I can now accept this loss. It's a loss that I can handle, and you sell it, and guess what? It keeps going back because your thesis was right. So that's why stop losses totally ruin your psyche if you don't have them, or if you put them in the wrong place. And just moving it once can wipe you out.
Yeah.
You know, we've all been there.
You kind of lose the idea of having the stop loss in the first place.
Correct, but then you're not even trading anymore. You're trading your money because you didn't even realize how much money you were going to lose on this trade.
It seems like as well that when you place your stop loss, people try to get like a really good risk to reward. So the closer you place your stop loss, if you're risking say 1% on your account and you're going for like a 10 times move, then that's getting you closer to getting your stop loss hit because you haven't given enough breathing space. So you've got to find that balance.
But that's a common problem. That's just placing a stop loss for the sake of having a stop loss in place.
Sure.
Again, every time I place a stop loss, it's where my thesis is invalidated.
Where Elliot's thesis is invalidated.
No. and anyways, there's a method, it's who use it, how you use it. But the difference is, if my stop loss has to be far away, I just reduce my size.
Yeah.
So if I'm prepared to risk 1% of my account, my stop loss on a normal trade says 20 points away, then I know what size to use. But if my stop loss has to be 100 points away because that's when my thesis is invalidated, guess what? I'll cut my size by 5.
Sure. So we could talk about stop losses for the next hour, I think. It's a whole another episode
all day and all week.
itself.